The Toronto Real Estate Board just released market report for June. In general, the market continues to cool down. But the board is still upgrading its 2021 forecast. So what is the outlook for the second half of the year? Let's go straight to the analysis. Number 1, the low-rise market. In general, the trend across all low-rise home types like detached houses, semis, and townhouses are similar. We will focus on the detached houses in the 905 suburb area because that's the most representative of a pandemic market with people moving away from the city for more space. Let's take a look at the number of sales. You see 3 peaks in the graph, with each peak creating a new record high. The first peak was just before the pandemic. The second peak was when we were deep in the pandemic and people really wanted more space. The third peak was just a few months ago when we were in the second wave lockdown. We have seen all those V-shaped recovery graphs in their economic activities when things reopen. It is interesting how we are seeing the opposite in the detached market. What we got is an upside-down V-shape. Went up really quickly and came down quickly as well. On the absolute scale though, the number of sales is still at historic high. It does make perfect sense that the desire for bigger homes significantly decreases when we can go out again, especially with the nice summer weather. People are excited about having a social life again, planning for a vacation a few months down the road. Their mind and mood have shifted away from buying a house. Another demotivator is, of course, the high price. Even though the number of sales came down, prices have stayed up high. So what we are seeing here is a more balanced market. Demands are satisfied, and there's less pressure pushing the price to go up. For the second half of the year, I would expect the low-rise market to continue to cool for another month or so. Then we would probably see more activities around September when new immigrants can come in again. Overall, I think we'll see a very robust low-rise market for the rest of the year. Number 2, the condo market. We also see 3 peaks in the number of sales, and we also see the upside-down V-shape. But the slope is not as steep as in the detached graph, meaning that the ups and downs are more gradual and not as dramatic as in the detached market. While the low-rise market continues to cool, we are already seeing a reverse trend in the condo market in the city of Toronto. There were actually more sales in June compared to May. Prices are also picking up. In the low-rise market, prices have been pretty much going all the way up since the pandemic. But there are more ups and downs in the condo markets because the downtown area was impacted the most by the lockdowns. I can definitely feel a change in the market momentum ever since the reopening. Remember that corner 1-bedroom unit I showed a couple weeks ago at the entertainment district? It was sold in just 5 days at $735,000. For the second half of the year, with restaurant, offices, and universities reopening, both prices and sales will be trending upwards in the condo market. Back in February, the Toronto Real Estate Board predicted that 2021 would bring 105,000 transactions with an average selling price of $1.025 million. Last week, it upgrades the forecast to 115,000 transactions with an average price of $1,070,000. The forecast points to a continuously strong market but doesn't distinguish between the low-rise and the high-rise markets. I would say for the first half of the year, all the spotlights were on the low-rise market. For the second half of the year, the spotlights would move over to the high-rise market. That's where we would see a lot of demands and competitions. Number 3, the rental market. Most people are predicting a rental market recovery in September, but I can tell you that it is already happening, especially in University of Toronto area. A 2-bedroom unit at Yonge and College was renting at $2,890 before the pandemic. Then rent dropped to $2,150 during the pandemic. The unit was relisted onto the market 2 weeks ago at $2,650. Surprisingly, there were 10 offers, and the unit were rented at $2,850 within 2 days. I'm going to do an unboxing video in a brand new building that's literally on the University of Toronto campus. We are currently repricing all our units because we felt the momentum in the rental market. I initially listed my 3-bedroom unit at $3,000 and quickly got 7 offers. So I'm going to release it at $3,500 and see what happens. I would say the momentum is felt the strongest around the university area because students have to prepare for in-person classes coming September. When office towers start to reopen, I'm sure the rental momentum will propagate to the rest of the downtown areas. I'm not sure if you drove downtown recently, but I can tell you that the traffic jams on the Don Valley Parkway are definitely back. Number 4, immigration. We probably won't hit the 400,000 new immigrants target for 2021. But by focusing on applicants who are already living in Canada, we welcomed over 91,000 new permanent residents in just the first 4 months of 2021. So what difference would it make for the housing market if these people are already living in Canada? There is a huge difference. If they had bought a property here before becoming permanent residents, then they would be subject to the extra 15% non-resident speculation tax. Now that they are permanent residents, they won't need to pay that extra 15% anymore. That's a big incentive for them to start buying properties. This will create more demand and competition in the market. And once our border reopens, we can expect to see a significant increase in the immigration numbers. So everything is pointing to a very strong housing market, especially for condos, in the second half of the year. If you want to take advantage of this relatively quiet time in the market, you can schedule a call with me at the link below. If you like this kind of market analysis, make sure you subscribe and hit the bell so you are always on top of the market.